Welcome to Trading Lounge and the US indices with Elliott Wave for the S&P and the NASDAQ. And starting with the S&P on the weekly chart here, our primary count is that we have wave 4 here, 1 and 2, 5 waves up for wave 3, an A wave, a B wave and a C wave here, looking for a bit of an expanded flat at this point. It's possible that there's a triangle pattern within all of this as well, but this is our primary count. Let's go to the daily chart and pick up this here. So from the from the wave B here, we're looking at 1 and 2 and 3 and 4 here, and down for wave 5 here in 5 waves in this section here of C of 4. It's possible that there is a triangle as mentioned, which would be a D and an E wave to this particular space here. It's something that we'll have to keep an eye on, and of course the market is going to stall within that space there. And at this particular time here, we'll find support on this first touching of this rectangle box here, which is the 50% retracement level. But otherwise, we'll look at 5 waves from wave 4 down to wave 5 here of C of 4. And on the 4-hour chart, it looks like this. So let's just go back from the top again. So from the top here of B of 1 and 2, and then 1 and 2 and 3 and 4 and 5 here for C of 3, ABC for 4, pulling back to wave 4 of 1 lesser degree. Yes, it pulled up higher than a wave 4 normally would, but we've got a bit of an extension in wave 5 here, so that's totally acceptable as way of structures go. So it does appear that we're looking at 5 waves to the downside here. As I mentioned, there is support from this low to this high here at the 50-60% retracement level here. So we're going to see that, then we're going to see a bounce, and that bounce can take us back to that little box there, and then we'll be moving down again from that point. So let's just have a look at this on this structure here on the hourly chart. So let's get this in place here. So from wave 4 top here of wave C here, we're looking at, it's possible it can be these patterns here, but we're staying with our primary count. So I'm looking at this as wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 here. If you've traded this down here, then I suggest taking profit at these current lows here, or if you want to be a little bit more diligent, you can use group 1. So group 1 of 2700 here, so 10, 20 and 30. If support is found, a tested support on top of 30 here is found, not just trading above it, but it must come back and test it and have your reference high. But if that tested support is completed at that point there, then you need to be out of that trade, because then we would be expecting a move back into this box in terms of 3 waves, an A and a B and a C wave coming up into here, and then moving from that point. So we can, if I've made a mistake on this low here, then you could possibly go low from here, but I'd still just give it a little bit more time. It does appear that we've got 5 waves in this little structure. I'll double check in a moment, but still you'd get a bounce off the 2700 here. But if that is the low there, and you might need to adjust this, but if that is the low, then we can just draw a line through here, and you can look to short over here. And shorting over here, of course, with trend lines, if I can just draw a trend line up here, it's the same as moving through horizontal trend lines as well. So the market would come down, hit the trend line, bounce back up, move back through, and then go back up there and then move down. Very rarely would you see a market, I mean, it happens, comes back up and does a double retest there. So always allow for that too with your stops, okay? But the migration of from support to resistance is really what you need to get into play here. You don't need to understand the Elliott for that. You just need to understand where the support and the resistance is. So yeah, have a look at that. Let's just see if I can pick this up on so the tick chart here. So for 5, so we want 5 waves in this little section here. So 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4 and 5 here. So 1 and 2 and 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave. So I think that we are on a low here, but this is the 530 area here. This is a group 1 here. So if support is found on top of group 1, you need to be long from that point. You could also short it too under the 2720 here for this case, but that's just really for scalping at this stage. I don't think I like that word, but anyway. Then yeah, so for support here, if I'll have to, if I could just draw it over, I can't draw on this side of the tick chart, so I need to be over here. So the arrival, which is doing now, that's the arrival, the reaction, the first high above the level, and then you'll see some type of corrective pattern. Not that it matters, but you would take this high or this high here on the long side here. Okay, that should get you up to here, where you'll see another. At the 5 being the second strongest number, you're going to see some sort of reaction at that point. But getting that reference point high keeps you safe. So that's a reference point high there. that will save you there. You know, that's simple. It's simple and it's effective. Does it work 100% of the time? No, but most of the time it's pretty good. It gives you a nice safe entry, and also too with having those highs in the market, taking them out. Market's proving to you it's actually going in the right direction that you want it to go in, you know. So let's just see, we don't have 5 waves up here yet, so support on that is critical. Otherwise you can just short under here because you'll be moving lower at that stage. Now the NASDAQ is much the same as well, so let's just have a quick look at that. Not the Netherlands, but the NASDAQ. Where are we here? Tech stocks, right. So I think I can bring that wave 5 in on that. Well, I'll just double check that, but the 1 and the 2 and the 3 and the 4 and the 5 here, and then if I can borrow these, an A and a B and a C wave over here, and that let's just get that into perspective here. So yeah, so that will bring us there. $7,000 is a great reference point there for that. So this little move down here, it hasn't made a new low here. Yeah, I mean, this could be counted slightly differently as well if it doesn't make a new low. If it makes a new low here, well, probably won't. Well, we'll see how the S&P does on the 2730. But and also too, shorting here, this is also natural when the trend is down, isn't it? So the other side of the coin of this is that the market, let's just draw it out here. The market would come down here. 8 is an important number for me, part of the trading levels. So then we would see our bounce, which we've got in here, and then we would see a move lower. But a move lower here would also see a bounce here, and then it would move through here, coming back and checking it here, and then that's your reference point low here. So in this case here, we'll just grab this. But we know that the S&P has pretty much got its low in place, and if it has another low and then bounces, well then that's fine. Well then this would keep you safe too in that regard, because the other count for this too is that we can have wave 1 up into this space here somewhere, and have this as 3 here and 4 here and 5 here, and having this as the A wave here, the B wave here, and the C wave here. It still leaves us back up here though. So that's also on the cards as well. But this move here has really got the characteristics, personality, whatever, of the third wave. So I'm just going to leave it 72 up there. It's always important for me. There we go. So so if you're short here, then it's also a good idea to take profit here as well on this low here. I mean, if I had time, I would write all these entries and exits and so on and put them in a spreadsheet and upload them. But I just don't have time to do everything. You know, it's just too much for me. So I have to enjoy myself as well. So I can't just do 16 hours a day anymore, as such. So, but look to take profit in this space over here, and just remember that if this number here becomes the resistance, you need to be short at that stage. And also to the bounce coming up here, we also need to look at this as being, you know, being this scenario here. It'll be a bit like, it'll be more like that anyway. So yeah, make sure you're shorting through there. So we're pretty well right. We do not want to go long unless we're looking for short trades. Okay. Yes, you can go long in any of these bounces in through here. That's fine. That's up to you. But in terms of actually finding a trend and placing trades, we would need the 7,000 as the support before we went long. Right. So we need to be on the right side at the right time. We need to be, we need to be on the trend. We need to be on point, on trend, all these trendy words that have been coming out. So that's how it is. Alrighty, thanks for tuning in. Cheers.